That's because I haven't switched my microphone on yet. Hopefully you can see my screen. Yep, brilliant, lovely. Yeah, I've got New Zealand, Malta, Denmark. Wonderful spread, and I know we've got a lot of people in the UK and Ireland and all over the place, so very welcome to you all. I just want to highlight something for you, which I've pointed out in the past, but if you're trading index futures particularly, then it always pays to have all three up. And I've got the YM, the NQ, and the ES. And for those of you who don't know, the YM is the Dow Jones future, the NQ is the Nasdaq 100, and the ES is the S&P 500. And what I actually want to highlight is the divergence that we've had in the last few days, and this comes and goes. Some days these three all travel in the same direction in pretty much the same sort of spread, and you see the same sort of price patterns and the same sort of volume coming in and all the rest of it. But over the last couple of days, we've had divergence. We've also had it again at the open today, and I'll just show you that. But yesterday, just to highlight it, we had the decent, nice widespread up candle here, pretty much the same as the day before. Good volume under there, that looks fine. But look at the difference on the NQ. We had a big up day here, closed back down near the open, and then we had a reverse of that, big fall and big rally. Decent volume under there. Completely at divergent from what was actually going on in terms of the YM and certainly in terms of the ES as well. So basically, over the last few days, we've had the ES and the YM moving in lockstep together, whereas the one that's been out of step, if you like, is the NQ. And actually what we've got today is a slight reversal of that, certainly from an intraday perspective at any rate. We have the NQ and we have the ES, which are kind of tracking up together. They're still bullish. They're trying to limp higher. It's not a terribly strong move. I'm just checking over on the VIX. I'll pull that over in a moment. It's been congesting on the faster timeframes, the 1 and the 3, but it's starting to drop away a little bit now. So expecting to see these tick up a little bit more. But what I actually wanted to show you is on the 5-minute, because this was at the open. Right, this is the YM at the open. This is 230, so this is the physical market coming in alongside the Globex electronic market. Big surge in volume, big fall, lots of volatility, and it's now it's still trading within the range of that one. It's trying to rally away from all this congestion, lots of volume point of control, and lots of price-based resistance overhead as well. That's on the YM. If I do the same for the ES, just pop that up full size, pretty similar picture. Couple of big down candles, lots of volume, awful news, blah, 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 but we're actually starting to try to rally. And as far as the ES is concerned, we're actually clearing well away from the volume point of control. We've gone through all the price-based resistance. We're climbing nicely and now up into a low volume node, so that should take off quite happily. And we're also supporting it, as you can see, with the trend monitor. So that's nice, a nice, decent rally developing. But if you look at the 5-minute on the NQ, totally different picture. This is the open down here, no volatility, no big crash, nothing. It's just carrying on higher. And the importance of that is that when you see it occurring on other indices and you're trading one in particular, it gives you some clue as to, well, you know, if it's that strong in that particular index, yes, there may well be reasons for that. There may be big company releases which are helping to push that particular index strongly, as opposed to maybe a Dow stock that's weighing heavily on that particular index. But when you see this sort of price behavior going on, it gives you a clue as to, you know, how am I going to play this? Is the market generally bullish? Is the market generally bearish? You know, what is this telling me? And it's so important. I can't stress it too strongly. You have to play all three alongside one another. And indeed, whatever you're trading, whether you're trading index futures per se, or whether you're trading commodities, you're trading risk currencies, or you're trading Forex, doesn't matter, it really matter. You should have these up somewhere because it just gives you that all-important view on sentiment. Now it's starting to break higher. The YM is starting to, it might well catch up. It's got a long way to go, but you can see the bullish sentiment developing in terms of the NQ. And I've got the NQ set up on the multiple time frames over here. This one, there we go. So now we're just on the NQ now, so we've got all the time frames, 15-second, which is one of my favorites over here, 2-minute, 5-minute, 10-minute, 15-minute, and over onto the daily. and it's just you know, it's now picking up some momentum. The reason it's picking up some momentum, I'll just pull this over. This is the VIX. For those of you not familiar with the VIX, it's a sentiment index. It is the de facto standard, if you like, in intraday and longer term sentiment. Oh, sorry, it's popped up. I don't know why that's done that. There we go. And it just gives you a view in terms of options and the balance between puts and calls in the options market, and therefore it's a direct correlation in terms of risk, and it has a direct relationship with the indices. And as this is falling, you expect indices to rise as fear is falling away, if you will, and vice versa. So it's a perfect complement to have as an intraday index. It's one of many, but it's certainly the Premier. It's in the Premier division. It's top of the Premier League, if you like, to use a football analogy. It's in the top 4. That one you should have somewhere on your trading screen, because it just gives you all that information. And you can see I've got the trend monitor. This is on TradingView, great platform. I've got the trend monitor on here. I've got the pivots on here. I've got the volatility on here. And the trend monitor is just signaling bearish. This is on 1 minute. This is on 3. This is on 5. And this is the daily. So let's just move that out the way again. So that gives you your view on sentiment. Got a nice rally going on here. Very nice, nice and comfortable, nothing particularly scary. If you were waiting for a breakout, if you're a breakaway trader, if that is your preferred modus operandi, nice example here. We've got congestion. What do we expect to see in congestion? 2 things. First of all, narrow price spreads and a reduction in volume. So everything is in agreement. Yes, of course, you've got little minor disagreements in here. You've got this little anomaly. There's a little bit of buying came in under here, good volume, nice wick to the lower candle. We've got another wick to the lower candle here. Another one follows it. So there's some decent support in there. Then we get another little one here, more support coming in, and then we get the breakaway, and the breakaway is on good volume. So it's not a fake out, it's a decent break. We're moving up into a low volume node. And as we were coming up into this particular phase of price action, one of the things that we teach in the Forex trading program is really to understand, to read the market, not only in terms of volume price at the live edge, but also in terms of understanding when a market is going into congestion and when it's coming out of congestion and into trend. And the way we use these little indicators, the pivots, is not so much to give us a heads up as to whether there is short-term strength or weakness in terms of those particular 3 candles, because it's looking at these 3 candle patterns all the time, and whether there's strength or weakness. What we're actually looking for is whether these pivots are, as we go into it, we get a pivot low, then we get a pivot high. What we're looking for now is, are we going to get another pivot low, or are we actually going to carry on high? We get a pivot low, so it starts to tell us we're moving into congestion, then we get another pivot high. We're into congestion phase. We're building a ceiling. The ceiling is defined for us on this occasion with the accumulation distribution indicator here, which is based on price. It's not a very thick line. The one down here is much, much thicker. It's much more dense. And what the indicator does is it paints that automatically. So the greater the times this is tested, the thicker it becomes. So it instantly gives you a view on where you've got strong levels of support or resistance or slightly weaker levels. This one wasn't particularly strong, only been tested and held 2 or 3 times. Nevertheless, once you break through it, you've got a nice little platform below, and on up we go on decent volume. We're up into a low volume node. And one of the great things about congestion, breakaways from congestion, if you're trading those, is it gives you an automatic place to, or position to, for your stop loss, because you've got so much price action here. And your stop loss automatically is going to be down below this level here, because then you've got all this price protection above in case the market reverses against and come back down to test. Just move the chat box out of the way. There we go. So when you're trading out of congestion zones or congestion areas, there are so many advantages to it. It gets bad press for one reason, that people always say, oh, I got, it was a fake out and I didn't know and I got stopped out and blah, blah, blah. That's because they don't use volume. If you use volume, it gives you a very clear signal as to whether it's true or false. If it's true, then price and volume are in agreement and off it goes. And if it's false, it's low volume, etc., etc. And that's the reason it gets such bad press. From the mechanics of trading perspective, it's wonderful, because as you move away, Your levels for your stop loss protection are really defined for you. You have a great wedge of price action, either above or below, depending on which way the breakaway is, and you just place your stop loss there, and it's very, very straightforward. You really don't have to think a great deal about it. So that's all moving very nicely. Not particularly aggressive, but nevertheless, it's good enough. Let's just see what's happening back on the other two. There we go. So this is the NQ, this is NQ on 5. So that's decent volume. So we've got, classic VPA there. We've got 3 candles, widening spreads, and we've got rising volume. So it's just a nice, very simple example of volume price analysis applied to a bunch of candles rather than, as we always do, we look at one and then gradually look at 2 or 3, and then you come out and get the complete picture. And obviously you're looking at this on different time frames as well. So see if the charts tell us anything else. That's it, down onto daily. So, that's where we're going. This is what the VIX is up to. Let's pull that across again. So we had this little move down. That was reflected in the little move up. We've now got the VIX has gone into congestion and is starting to try and tick up a little bit, which is why we're seeing, one of the reasons we're seeing a little bit of a pause in the indices at the moment. Move that back out the way. Okay, let's go and have a look at the tick charts. Here we go. Right, now on the tick charts, what I've got is, let's pull that over a little bit. In fact, let me just pause there for a moment, if I may. I'm just going to switch off for a moment.